Welcome to the Fintech Founder Journey, where we explore great fintech products, great fintech businesses, and great fintech leaders. I'm your host, Mike Scott, and I'm also the co-founder and CEO of Nona Digital, an expert firm that accelerates product development for fintech and blockchain scale-ups. In today's show, I'm joined by Duncan Currie, Country Manager for the Australia and New Zealand regions for Marqeta, and we'll be talking about his journey in the card issuing space, both on the Marqeta side and on the customer side. Today's episode is sponsored by Nona Digital. Working with us to create or accelerate your fintech product means you get access to our expert product teams across design and engineering that have been building products together for a very long time. You get the benefit of a studio that is big enough for no key person dependencies to exist, but small enough so that you're always close to one of the principals. And you get the benefit of our reusable component library, which basically means we're often able to build your product faster than anyone else could at a comparable standard. As one of our clients once said, Nona is the type of business that paints the back of the wardrobe, because if you want to be the best, that's the kind of thing you do. To get in touch with one of our principals or myself, head over to nona.digital to book a call directly. And now onto the show. Today, my guest is Duncan Currie, who's been working in financial services and fintech for a very long time. Duncan has a very deep career in the space, working at senior levels for companies like Visa, ANZ Bank, the NAB, Crypto.com, to name just a few. He has a massive depth of knowledge in the card space, and this has led Duncan to his current role as Country Manager of Marqeta for the Australia and New Zealand regions. For the very few of you listening that might not know who or what Marqeta is, they are a massively successful fintech that focuses on modern card issuing platforms and infrastructure to help companies build and manage payment programs. And they have a team of over 700 people and growing strong. Duncan has also definitely got some entrepreneurial DNA in him, and he's founded and run a good few businesses too, some totally unrelated to fintech. Duncan is seriously experienced in financial services and fintech, and more importantly, just a really nice guy. Welcome, Duncan. Good to have you on the show.
Thanks, Mike. I really appreciate the intro. And if I could bring you with me wherever I went to introduce me, that would be great. That was brilliant.
Yeah, no worries. It's easy. I had to, my challenge there was actually condensing your bio because, man, you've got a serious history in the space. So well done. Let's start by just painting the picture, Duncan. So what does Marqeta look like today globally, and what does it look like in the ANZ region? And just through your lens, because I've given some stats, but just tell us, like, paint a picture globally, paint a picture locally, go for it.
Yeah, perfect. So Marqeta's been going around 11 years now. So Jason Gardner, the founder, also a serial entrepreneur on the way through, and has kind of founded and exited some pretty decent payment businesses in the US. So we're a bit of an opportunity to kind of work with some good brands to support what is a fairly simple kind of prepaid type product, and then over the journey kind of really started to focus on open API access for developers, because they really found that when they were coming to do card issuing themselves, everything was in a black box. It was very, very hard to connect into. How do we actually, launch a program? You're going to have to wait for biannual releases and all these sorts of things, and found it, quite problematic. So it started. Marqeta started life as a and it still kind of retains its DNA in the US around card management. So we call it program management. So it really started off as a program management business, providing full outsourced card services to people. But then, people started to getting quite excited around the technology that underpinned that managed services, and that's what's really enabled Marqeta to continue to scale, not just in the US, but the UK, Europe business has been going for 3 to 4 years now. Just trying to help people make sure that they can get card programs to market as quickly as they can.
So something that struck me, and this might be a really naive question, and naive questions are usually quite good for the audience because, I don't mind asking stupid questions because then other people don't have to. So I was kind of surprised, maybe I don't understand the business well enough, but I was kind of surprised to see Mastercard as an investor. I didn't do enough research to see when they invested. That might be relevant, and I immediately went, hold on, isn't that a conflict? Aren't you guys sort of in competition with Mastercard? And you're shaking your head already, so obviously I've got that wrong. But can you just explain, because to the layman, if you go, you're a card issuing service, I'm sure immediately people are going, hold on, Visa, Mastercard, Marqeta. How are you not in competition? How do you enable Mastercard? Why did they invest in you guys?
Yeah, perfect. And not just Mastercard, Visa as well. So I actually found out about Marqeta when I was working at Visa. When we invested, and I'm like, who are these little guys out of the US that we just invested in? And one of the guys that I was dealing with out of the US actually started working for Marqeta. So we've had kind of funding from both of them on the way through. So we enable them is the short answer to that. So we when we come to do kind of card processing, it is either a Visa or a Mastercard that we're processing. So, Zip as an example is a Visa card that we process. Afterpay is Mastercard in Australia. So we help them get their brands and out the door. So, they talk about the four party model, which is around issuers, acquirers, the banks, merchants, and customers. But there's actually, if you delved into it, there's probably a good 20 people playing a role in a single transaction going through. Like, we are just one of those kind of elements that kind of come through, and part of the reason why we got investment from Visa and Mastercard is because we were kind of bridging this gap of smaller brands wanting to get programs to market, but then kind of struggling up against these banks and the regulatory compliance regimes that then they put on all these sorts of things. And these, old legacy mainframe systems that are, probably older than you and I, which are very, very hard to then kind of build, really, really nice products around. So, that's why they saw the opportunity that we could help them kind of scale their business, and they're very, very much in the enabling space. So, how do they enable the market, and obviously saw the opportunity for us to help them with that.
Awesome. So that's a good segue into the next question. So, in the pre-interview, you said you're in a sort of a unique position because you're now country manager for ANZ, but you've actually been a client, and you've actually set up card programs on, let's call it the startup side or the customer side. So,
Correct.
just for context and I guess simplicity and clarity, talk me through what the experience is of setting up a card program for your business. You can do it through the lens of when you were a client. You can do it through the lens of your current role at Marqeta. But, we all know what it means. But what does the process actually look like today?
Yeah, no, perfect. And certainly something I'd like to talk about is around the perception around the commercials as well. It's quite interesting. Sometimes historically we get people go, oh, we'll set up a new bank, a new neobank, or a new brand, and we'll start processing transactions and start making money. So, well, that's not actually kind of how it works, because money's got to come from somewhere. But kind of speaking to kind of those many parties that fit into a car program, and this is the simple version. But typically, like brand X, so I want to issue a new card program. You've got the network, so either Visa or Mastercard, so they're a key component to that. But they don't actually issue their own products. They are a global network, a global transaction processing business. So they have what's called principal members, or we call them a bin sponsor. So they're people who are members of Visa or Mastercard, and they have these bins, which and a bin is essentially the first six digits on your card. So these guys are the ones that are kind of owning it. So we're partnered here in Australia with a company called Novartis. Novartis are our bin sponsor. The likes of ANZ, NAB, they're their own, a member to that. Then we've got issuer processors, which is, kind of where Marqeta plays in that role from a technology perspective. And then you've got like a cards department. Now, a bank has a cards department internally, But a lot of brands don't, and that's where they kind of need the program management services. And again, that's a role that we tend to play with that. And then the brand is the distributor. So they're the guys at the end of that. So within the kind of the value chain of a card program, the brand itself is kind of the small component of it. As brands grow, we see them kind of bring more and more of those things in house. So trying to think of a good example, like Revolut. Initially, when they launched on a prepaid card issued by, I think, Nationwide in the UK as the sponsor. GPS is I'll give a plug to the competitor. GPS is the processor for that one. But as they grow, they start to go, okay, how do we bring some of these things in house? So how do we get the cards department in house? So we don't have to have managed services getting done. How do we then now become our own principal member? So now we're not having to worry about another mouse to feed. So it's a good evolution to go through. What we have seen, rightly or wrongly, in this market is a tendency to go to base really, really quickly, and get principal licenses, get a financial services license, get a banking license, potentially well too early, and instead of just going, okay, how do we test the waters? How do we get customers on board, and then start supporting that kind of that approach of going, okay, so now we've got a base that we can actually start getting rid of some of the value people in the value chain, and bringing some of that capability in house. And unfortunately, the best example with that is Zinja. So Zinja had the right idea. They partnered with Inju initially as their kind of bank that sits in behind, as their BIN sponsor. But then went straight to a financial services license and principal membership and all this compliance cost to kind of manage it, just without the kind of revenue lines coming through. So kind of when we think about kind of launching a program, it's going, okay, one, what's the revenue model for this? How are we going to support it from a revenue model? And two, kind of what are the things that we're really good at, as in the brand? What are we really good at? We're really good at customer experience. We're really good at branding. We're really good at acquisition. Focus on that core, and then how do you kind of get support in some of the other areas? And that support is significantly cheaper than trying to do it yourself.
So does that mean, Dunk, that you're interesting what you said there about Revolut? I mean, it makes perfect sense, but like something the size of Revolut, like most services, at some point they'll want to bring it in-house just because they've got the overhead. And I mean, that makes perfect sense. But does that mean that Marqeta's kind of target market is earlier stage fintechs, like smaller, I wouldn't say startups, but, not multi-billion-dollar enterprises? Are you guys going after the sort of the smaller than Revoluts as your sort of target market?
No, I think we kind of bridge kind of both ends of it. So we kind of talked about kind of that managed services and the program management, as well as the processing. So the processing is a technology play, and that's what we're very, very good at. The program management is also a capability that we bring to the fore. Kind of coming back to the conversation talking about around the growth in the US, we've got our kind of DNA in program management, but what we're seeing the growth in now is around the technology, and a good couple of clients which we'll hope to announce purely around that kind of technology play. Zip and Afterpay are actually good examples of and Klarna here are good examples of us purely as a technology partner. And the UK business has been focused on that as a technology, but then you kind of flip the other side and you look at Square in the US, and we just announced today that the launch of the Canadian program. Okay. Now they're a huge business. massive business.
Yeah.
We're their card department. Yeah, so we support them with program management. They do have some capability in house. So if you look at Canada, they are the principal member, but they actually kind of rely on us to do some of the program management and to kind of support them with the program. And that's a very, very large program.
Yeah, absolutely. So I want to shift gears a little bit now. Last night I had a conversation with a friend of mine who's moving to Australia, and inevitably, whenever I'm speaking to a friend, at some point they'll start asking me about something to do with crypto, right? And usually I'm like, oh God, here we go. So this particular conversation was, he's moving to Australia, and I said, listen, you better just get yourself organized when it comes to tax in the crypto world, because Australia has got a very clear mandate. The ATO is very clear about it. Yeah. There's really not much gray area. How it actually gets done is a whole different discussion, but their position is very clear, right?
Yeah.
And he said to me, oh, Mike, don't even worry about it, man. I've got this amazing service. Check out this link. And I won't say what it is, but he gave me a link, and he said, all you do is you get a debit card, you link it straight into your Bitcoin account. You don't have to pay tax. And I was like, no, man. You're so wrong about that. You are so wrong about that. You definitely do still have to pay tax. And where I'm going with this is there is a lot of misinformation out there around crypto in general, certainly around crypto debit cards.
Yeah.
And this is a really smart guy, a very strong entrepreneur. He is very well informed. And yet he still thought that, oh, hold on, this is an awesome loophole where we can just bypass the entire tax system. Talk to me about your experience of crypto debit cards, what you're seeing in the market, what you're horrified by in the market, what you're excited by in the market. Just talk to me about, from an issuer perspective, like what are you seeing in this world of crypto debit cards at the moment?
Yeah, I'll actually go back one step and go just more broadly from a card issuing perspective. If there's a loophole, some people will take advantage of that loophole. One of my favorite examples is the cash economy and how do you get kind of cash so it doesn't go through someone's bank account and therefore they don't have to report it from a tradesperson. You go in and you go somewhere and you buy a gift card. You buy your gift card with cash, and now all of a sudden you can transact online. So, but I don't think any accountant's going to go, hey, tradies, avoid tax. Buy gift cards with cash. So just because you can doesn't mean you should.
Doesn't mean you should. 100%.
But so it's I guess it's been going on for a while, and I guess kind of the emergence of crypto is just kind of the latest kind of view to it. I think. I'd like to think that there's a lot of players now who are quite mature in their approach to communicating what it is. Certainly my experience with the guys at Crypto.com who've been ferocious in their in their branding as of late.
Did you see? Did you see the stadium? Did you see the stadium announcement yesterday? Yeah. I mean, that's nuts. Yeah. That's so cool. Anyway.
The 76ers, they've done a very, very good job. But they, very, very, straight up along, because it has historically been, this kind of murky area, you have to go harder on compliance than potentially what you would need to normally. So I think, there's, in every business, crypto or not crypto, there's always going to, kind of be outliers that try and skirt around, whether it be AML, CTF policies, international transfer companies tend to be quite hot for that. Kind of pre the emergence of crypto, it was very, very hard for international remittance companies to get bank accounts, and that was the big debanking process that was going on then. Now, cryptos and people related to the crypto industry are going to be feeling that same kind of debanking process. So I don't think I think it's just it's kind of the same thing, just kind of repeating itself specifically for it. But I'd like to think that as it's emerging, as it's maturing, the approach to it is, and the communications that's coming from some of the bigger brands is a little bit more, in line with the intent for regulation. And like I said, there's always a way to skirt around things. The underlying kind of compliance and reporting obligations and all that sort of stuff from a card perspective is exactly the same for a bank or a crypto. So that if you're doing transactions over $10,000, it's still going to get reported through to AUSTRAC. It's the same kind of obligations that sit in behind it. So if people think there's a shortcut in there somewhere to sneak around something, there's always a way that that'll kind of come back to hurt an individual at a point in time. And look, there's particularly for Australia. So now, so even Crypto.com for a while was issuing cards out of Singapore while they kind of went through their own process there. So now they're going to start issuing their own cards here. So even through that kind of transition period, like there's still lots and lots of checks and balances that kind of go through to make sure that we know where the sources of funding's coming from. So utilizing like every bit of crypto fraud technology on the way through. So it's been totally an interesting space to be a part of.
Yeah, I mean, from your perspective, it must have been fascinating to watch. I mean, you've been in the financial services space and fintech space for a long time. So, and even specifically within the card issuing space for a long time. I mean, it must have been quite a journey to watch this emerge and now to actually be actively in it. What's your experience been of? Yeah, go for it.
Well, the very first program that we had come to us when I was at Visa got declined because Visa were like, that's weird. Don't know what that is. Kind of fast forward, kind of 7-8 years, and they're buying their own kind of junk. Yeah. So things change. The more information people get, kind of the better educated that they are, and but yeah, it's just interesting. The initial stance is like, no, it's not a. Because the Fed in the US said, no, it's not value and all that sort of stuff. So no, we can't treat it. Just that whole, kind of acceptance and going, okay, well, the cryptocurrencies themselves, and then there's, kind of blockchain, it's starting to get a lot more, mainstream and consistent with its approach, which is good.
Yeah, and actually, just on that, I saw recently, obviously, USDC is the stable coin that's issued and owned by Circle, and I saw that Circle not only is listing or has listed, but they've actually applied for a banking license of sorts. And whether or not they get it, I mean, I don't know, but it really is an indicator, right, for the maturity of the regulated environment. So we don't have to go down that route, but there really are some really good signals. But then you've got things like USDT, Tether, which are most definitely not going down the same route. So that's, there's still definitely a lot of learning to do. Yeah. So when we were chatting, and we're going to shift gears a little bit now to something sort of semi-unrelated, but, I asked you a question and I said, what are some of the things you're most proud of in your business life? And the first thing you said, I don't know if you remember this, but you said, the courage to do stuff. And yes. I was just like, that's really cool, man. And, just to paint the picture here, like I typically interview founders, and the audience is predominantly founders of varying levels. And, you've definitely been a founder in your time, and you understand this, but it largely comes down to courage, like working through positioning. We were working with a really good consultant, and he said, Mike, positioning is far less about strategy and far more about courage. And I was like, what are you talking about, man? It's not. It's all about strategy. And now I've come to realize what he means. I'm like, oh, you are so right, man. It is all about courage. It's like the courage to say no to things when you actually need it, the courage to only say yes to the right things. So when you answered that, when I said to you, what are the things you're most proud of? And you said the courage to do stuff. Talk to me about what you meant by that.
Yeah, maybe if a few of my attempts were successful or more successful, I might have had a different story. But no, I think kind of my early starts and I think you had this kind of background. A lot of founders, setting up businesses in the high school, and came from an entrepreneurial family and did all this sort of stuff. So it's kind of inbuilt. It was just kind of naturally what was going to happen. That wasn't necessarily kind of my background. Like my family were kind of working class, kind of grindstone people. I spent the first kind of 10 plus years in my career, kind of working in a bank. I think it would have been, I guess, easy to just keep doing that because, that's, it's just what people do. Like the circle around me, had been working at the same banks forever and all that sort of stuff. So I think the initial, no, I want to try doing something different here. And part of the catalyst for me, I was doing product design for small business cards. I'd never been a small business before, so what am I doing? And this is back in the day when product development, it was more called, was actually done on a spreadsheet. It had nothing to do with customers. You didn't do customer research. You didn't do all that sort of stuff. Just going, okay, how do we make the dollars and cents work? And I was like, what am I like? How can I understand what's going to work for these people without being a small business myself? Started getting itchy, and then started exploring, and then fast forward. There's a few pivots along the way, and ended up with a bike shop. And I tell you what, that was one great experience. Got to wear shorts every day and play with bikes. I know you love bikes. So it was great fun. But I kind of went back because I did that while I was in career break. And I was like, the number one learning that I can kind of give you guys from a credit card perspective is that small businesses do not care about credit cards. Yeah, they've got suppliers to worry about. They've got customers to worry about. They're thinking about marketing. The amount of headspace that I dedicated towards my banking products was very, very minimal. Just don't balls it up. Yeah. So that's all I want you to do. Don't break it. If you don't break it, I'm not going to go fix it because I've got more important things to do. And I think it's very, very easy in that environment to think what you do every day, all day, every day, is kind of the headspace of where other people are at. And from then, I think, you just start getting itchy. You start going, oh God, that was fun. I really enjoyed my time, and then you start, kind of thinking about other opportunities. And look, the bike shop didn't eventually end up going as well as I would have liked. Quadrupled the revenue, and kind of did well out of it. But it's a retail. You got high cost of staff, high cost of product, low margins. So it was tough to make some money on. And again, it would have been very, very easy to go, okay, well, I'm just going to go back to the bank and sit there and do that for the next, whatever.
But that's huge, Dunk. Just to jump in there, like you said something almost under your breath there, which is such a critical piece of this, where you said something along the lines of, working in the bank, I've been there for 10 years. You didn't say this, but I'm guessing there were people that had been there for 30 years and the same branch. And you said something along like, that's the circle I was in. I think you said that. And that is such a difficult thing to break out of, right? The whole lobster analogy, where one climbs out and the other ones pull it back in. So just talk to me a little bit about because you just kind of brushed over that, but that's a big deal, right? How did you do that? Because you weren't nurtured by your family as an entrepreneur to kind of bust out and try things. Your immediate circle was not exactly inspirational in terms of busting out. How did you do that? Did you have a partner that was supportive? Did you have a friend? Or were you just like, I'm just going to do this? Talk to me about how you actually broke out of that.
Yeah. So there's probably a couple of things. So whilst my parents were working class, my grandfather owned businesses. So I had a role model that I used to kind of look up to from that. Also my best mate and my best man at my wedding. I don't think he's ever worked for anyone in his life. So he's very, very entrepreneurial. So he's and in New Zealand, he's got a cleaning business now. Has had a property development. Has had a hospitality business. So very, very. But to be honest, one of the biggest triggers for me, someone celebrated their 35th anniversary at ANZ, and I'm like, I do not want to see myself celebrating my 35th anniversary at ANZ. So what am I going to do different here? So that was probably the biggest catalyst for me, is just like, I saw someone who was my future and I didn't like that future. And I'm like, I don't want to be in that position in 25 years time, just sitting here doing the same thing. So,
I remember hearing someone once say, like, you have to pick an enemy. And I always kind of didn't like that, because I'm like, that's kind of an aggressive first stance. But I think I know what that means now. And it's like, you don't have to pick an enemy in an aggro sense, but you've got to pick a thing that motivates you. And I like what you said there, because it's like, you actually weren't aspiring to break out. You were just like, shit, man, I do not want to be here for 35 years. How do I reverse engineer this from there, which is really interesting.
Yeah.
We also, in the pre-interview, we spoke a little bit, and I don't usually talk about this on the podcast, but I think it might be interesting here. So we spoke a bit about kids and, how to raise. I don't come from money at all. And my daughter's growing up in a very different environment materially, let's call it, to what I grew up in. I had a loving home, and I'm deeply grateful for my parents. But from a material perspective, it's a very different experience. And my daughter's 6. And the other day she said something to me like, can I have this? And I said no. And she's like, why, Dad? We've got enough money. And I was like, oh God, how do I answer this? Like, how do I? Because I don't want to say no, we don't, and then cause anxiety. And I don't want to say yes, we do. And anyway, I won't bore you with my strategy with that. But you've been through. You said your kids, your parents were working class. You're now in a pretty important, impressive, respectable job. But you've had this interesting path to get there, right? And you've had this path where you probably deeply appreciate money and personal finance and things more so than maybe, I don't know, someone with a different path. Just without going to, I don't want to get into your personal life too much, but just like how are you thinking about how to instill the right values when it comes to work and money and entitlement with your kids, having gone through what you've gone through?
Yeah, it's a struggle. Yeah, because you want to shower your kids with everything that you didn't have, and swimming lessons, piano lessons, toys, and all that sort of stuff, and you start to see the impact of that, and kind of what struck home for me is my mother sent over my toys from when I was a kid. And I'd protected these things because I knew if I broke them, there was no other toys coming. Yeah. So our boys are like, I gave them my toys for a week and they were broken already. So and so it's a very, very different consumable model now. So I think there's no right answers for anyone. Everyone tries something different. And I actually got the question the other night. It's like, how much money do you have? So I want to kind of bring them into the tent on that sort of stuff, but also make sure that they know that it's not an appropriate question to ask anyone outside of the family, because of these reasons. They're like, why do people care? Like what you ask them? Well, because they might not have as much money, or they might have lots of money, and they don't want you to know. But I kind of want to make sure that we're open with those sorts of things. But then trying to get them to understand the value of money is kind of where we're at the moment, and we're kind of using cards as a way to do that, and now instead of us just buying whatever it is because we can afford it, it's just like, well, here's your earned wage, based off your task that you get. 50% of that is going into savings and 50% of that is going into spending. It's like, oh, can I get all of it into spending? It's like, no. That's going to buy your car when you're 16. Yeah. So you're not touching that. So this is your spending. So next time when you ask, can you have a toy? It's like, you can. It's coming out of your card. It's coming out of your money. And if that's what you want to do, that's your money. And it's interesting. So I've got 2 boys. One is 6. One's about to turn 8. and they're very different in the way that they do it. Yeah, so one's got, the youngest has got more money on his card than what the eldest does, because the eldest sees something, gets something. But now the youngest can buy something bigger because he saved his money. So they'll start to learn hopefully at an early age around because it's now their money. It's not spending my money. But it's a tricky one because you want to.
It's so tricky, but it's so important. And I must say, I think we might have even spoken about this. I've read a lot about personal finance, and I'm very interested in it because I think it's very difficult. And I think we won't go down this avenue, but I really do believe that there's a massive lack of personal finance information. And I think if people were better educated, we could have much lower levels of anxiety in the world, because I think it's a common denominator, and people don't speak about money. So it's a double-edged sword, or a double whammy. And, I've read a lot. I've read most of the books that are available. And the system that I've come across that I like head and shoulders better than anything else is Scott Pape's Barefoot Investor system, right? And I think we've spoken about this. And just for the listeners, he offers a book called Barefoot for Families, which is exactly based on what you just said. You have your different buckets, and one's for spending, one's for saving, one's for giving. And I got to tell you, like with Layla, who's 6, we started this thing with her. And by the third week, I was blown away when we did her pocket money. She took such joy in taking her spending money and pouring it into her saving money. And she just she looked at me and I smiled and she smiled. And immediately she got the concept of delayed gratification, which I've always struggled with, to be honest. As a kid, I would never have been able to do that. Yeah. But she's instilling that at the age of 6. And that delayed gratification, I mean, you'll know this as a senior business leader, that's one of the fundamental things that you need to make good decisions. So anyway, we won't go too much about kids because we don't normally do that, but I thought that could be a cool little discussion. So I'm conscious of time. We're running out of time, which is always a good indicator that it's been a good conversation. But I want to move to some rapid fire questions.
Yeah.
So you don't have to go into big detail with these, just sort of first thing that comes to mind, and then we'll wrap up. So the first thing is, what scares you in business?
Overcommitting and under-delivering.
What content are you currently consuming?
Podcasts. I've always been a big podcast, but I've started going analog, back to old school books.
What is the last book you read, cover to cover?
Do you know a fiction book? What's it called? Pillars of something or other. I'm terrible with names, but it's a historical fiction by Ken Follett. So just escapism for the mind. It can't all be about business.
Just a quick one on that. I remember a couple of years back, my co-founder Ed. I was really stressed. It was a bad time. It was stressful, and I was like. And, he gave me such good advice. He said, Mike, just go read something that isn't business related. Because I only ever read business books. He's like, just go read I like fantasy. He's like, when last did you read a fantasy book? I was like, I don't know, 6 years ago. He's like, just go read a fantasy book, dude. And I was like, no, I'm not going to do that. And I did it. And I was like, this is amazing. So it can be really mentally healthy.
Yes.
What's the next one? What is something that you're going to be doing in the next 7 days to improve yourself or your craft?
Myself, tomorrow morning, going for a bike ride. I always find healthy body, healthy mind, and co-related, to be quite honest. Going back in the office and back riding to work. So you just feel during the day you got a lot more energy, a lot more focus, and can get a lot more done.
Yeah, awesome. I'm also going for a ride tomorrow, so I'll send you some pictures and we can compare notes. Then the last question is just around you're a dad, you're a senior executive of a rocket ship fintech, you're a busy guy. What are some habits or routines or rituals that you have to just, I don't like the term peak performance because I think that's kind of by definition it peaks and then drops. I try to strive for optimal performance rather than peak performance. What are some things that you do daily or weekly to help you not wobble too much and just sort of keep that performance going?
I think the first thing is to acknowledge that you are going to wobble, and kind of not beat yourself up, kind of when you're having an off day, but. The one thing I'd add to that is that I'm getting older. So, the things that you used to be able to kind of shrug off when you're younger become a lot harder. So, certainly, eating better, drinking better, the alcohol consumption is almost gone out the window. So it's around, very, very much of the body, kind of dictates the mind, and if we take care of, and sleeping's the hardest thing for me, because, my mind keeps racing at all hours. So kind of using, some meditation apps and those sorts of things, as I go to bed to make sure that, I can try and digest. Again, I'll kind of come back to, the simple act of riding my bike to work, because you get into work mode, and then you ride home and you come down from work mode into home mode, and that way I can be present for my kids. So I'm not thinking about work. Is kind of what I tend to focus on now, but also not beat myself up if I'm having an off day, because it's going to happen.
Yeah, I love that. And somebody, I think I read it in a book somewhere, but it's such a powerful statement. And the statement was, mood follows action. Action doesn't follow mood. And It was I think it was Rich Roll on the Rich Roll podcast. If you don't know that podcast, you'll love it. Check it out. And it was just this sort of really important moment in my life where I always believed that you do positive actions when you're in a good mood. So I'm feeling good, now I'm going to go train, or I'm feeling good, so I'm going to be really nice to my wife and kids, and that's actually total bullshit. Like, it's totally bullshit. Like, your actions dictate your mood. And that was such a enlightening moment for me, because that means I was like, oh, okay, so that means that I can actually dictate my mood. I can do these things and the better mood will follow. But conversely, if I do those things that are bad things, that mood will follow.
Yeah.
And it's such a powerful thing. And, me and you love cycling, but it can be many different things. But for me, I have a process now that I actually, whenever I'm low, I actually initiate a process. I actually wrote an article on my process, because it happens so often. I was like, hey, this might help you. And a lot of people were like, wow, this has really helped, because it happens so often that I can do these things now. And I know that if I just do this and then that and then this and then that my mood will follow. So I really resonate with that. And it's a very powerful thing to realize.
Yeah, and understanding self. So I think you've got what triggers you. What helps you. I know what helps me, and kind of get in the right headspaces. So it's just kind of knowing self and experimenting. Yeah. So what might help you. Someone might take a little piece of that and go, do you know what, that was really, really good. So and again, kind of coming back to that first thing, having the courage to give it a go, and if it doesn't work, move on and give something else a go.
Yeah, 100%. Dunk, been a very cool conversation. As always, we bounced around, which I love to do. It's good for my ADD mindset. We covered a lot of stuff, but if there was just one thing that the listeners were to leave with today, what would that one thing be that you would want them to take away?
Have the courage to try something, and if you're trying something related to cards, do it with Marqeta.
I love it. I see what you did there. That's pretty good.
I should be in sales.
You should be in sales. Look, it's been really cool speaking to you. I just love the humility. What you guys are building in Marqeta is seriously impressive. Wishing you all the best in the ANZ region. I'm sure it's going to continue to be a major success. Do you like to be contacted or followed? And if you do like to be contacted or followed, how can the listeners contact or follow you?
I am a LinkedIn aficionado, so LinkedIn /Duncan Currie, and you'll get me there.
Easy. Dunk, thanks so much. Thanks for making the time. It was really, really great. I learned a lot, and when the world opens up a little bit more, and my newborn isn't so newborn, we must get together for a ride. We will definitely do that. Done. Thanks for making the time for coming on.
Thanks, Mark.
Awesome.
Appreciate it.
No worries. To the listeners, I hope you got some value from today's episode with Duncan Currie from Marqeta. I sure did. I think my main takeaway is that, you just need the courage. And I think even if everyone around you is doing something, it doesn't mean that that's the right thing to do. You've got to follow what you believe is right and just have the courage to fail and evolve. Thank you for listening to the show. And if you'd like to discuss your FinTech or blockchain project with us, you're welcome to book a call with one of our principals at our website, which is www.nona.digital. And I'll be back next week with another episode to explore the FinTech Founder Journey.